Brent crude oil prices are coming down sharply, and we're now at the TP. That's where, at these levels, I would start to book profits, unless you have a very pessimistic point of view and think that the economy will keep on suffering, which I personally think will happen. But I think here, from a short term perspective, we have achieved our objective. So, a few days ago, 7 days ago to be exact, we said that Brent crude oil prices were creating these higher and higher lows, and that the very short term trend was bullish. But we did also say that this level up here, around 68.30, was really important, and the bigger picture downtrend was bearish. So a break to 64.42 could send us down. I said 62-ish, so this low here, maybe all the way down to 60. Now, that's exactly what happened. We had a break here. It took a while, but we had that break. So let's just recap here how we can use multiple time frame analysis, and then I'll explain a little bit what could happen next. So from a big picture perspective, you can see how important 68.3 was, because it was the low here from September 2024. It was also the low here from March 2025. Already here, I said a break to this double bottom could send you all the way down to those 54.80. We also said that from a fundamental point of view, with what Trump was doing, you have a weaker economy. We have seen that with US GDP contracting for the first quarter. As well, we have ADP numbers coming in much weaker than expected. Now, the idea with that then, with the big picture bearish outlook, with the technical bearish outlook, it was a matter of just short selling. So here is the tricky part, right? So with the benefit of hindsight, here we're gonna try to figure this out. So imagine we would have shorted here. So what one could have done from a pure sort of multiple time frame perspective, one would have said, okay, this is the most recent high, and if it goes down here, I got a 1-to-1, which is obviously not that great, right? Obviously, we dropped all the way down here, so it would have been a 2.34. But I think this could have been improved a bit, where we would have gone with the breakout and maybe not work with this high here, rather maybe work with this high here. So then immediately you get a 1.75. You can also do something different, maybe even narrow it down a little bit more, like that. Why? Because if this is a genuine breakdown, it should really drop to the downside and should really go as high as it's done here. Think about what I just said there. If this was a genuine breakdown, so what we're doing there is that we're putting conditions where we say, well, this has to go down and shouldn't really come up anymore. Because if it goes all the way up there, it's very likely that I will be stopped out. Oh, sorry, that this is a false move. Okay? So it's okay many times to put the stop loss a bit tighter, although this is the actual high, because it shouldn't really be up here at all after this. Now, if we would have done it like this, your reward ratio would have been 2.87 on just this big move, this move here, which is obviously really good. Now, I didn't short this one myself, I didn't trade this one, but if I would have traded here and then I would have seen this go up and I didn't see it come down, then my time stop would have kicked in. So my time stop would have kicked in, and that would have been, oh, hey, look, you had a breakout here at 5 p.m. My time, which is 5 p.m. European time. And then, you spend a couple of hours, so this will be like 8, 10. So I would have probably given it a couple of hours here, and it didn't break down. So I would have closed this position. And then either with a limit order, maybe putting a limit order here to short here again. And then when we do this, it's much more well-defined. Firstly, it's happening at 7 a.m. London time, European time, which is a good time to have a breakout. And then as well, you have now the possibility to just work with a stop loss there. So when you do it like this, you automatically get at 2 times risk reward ratio, which is good. And then obviously the whole thing collapses, which is even better. So that is how we can plan around those things. Now, we're looking at this right now, and obviously this can keep on dropping. There are people here that are probably going to try to buy here with stop losses below, and we know the market loves to go and try to sort of take out stops. So I would probably look for this to go a little bit lower, and then if we have a sweep is when the price goes down through stop loss orders and then pushes higher, then we can have a bit of a correction. And I think that's what's going to happen next here, right? So maybe down and then up. But we do want to keep on selling. So now we need to identify where are the levels of resistance. So probably this level here. This level here is probably it. And we can now just be bearish probably just here. And then if the market goes up like this, we will have a risk of almost 3%. And then if we revisit the low, that's a 1.22. And if we hit the actual low, that's a 1.8. And that's how we need to manage it there. You can see here as well, because we're not getting that optimal entry, because we're not getting in where this trend aligned itself with the big picture, that's why the risk to reward ratio here is less good. As simple as that. And when you're trading with the trend, many times you don't get that crazy risk to reward ratio. If you're going for a breakout like here or breaking from a rectangle, you can usually get more aggressives. But let me say the following. This doesn't necessarily mean that it's less good. What it does mean, though, that it's more intense, because when you're working with a trend like this, it's literally short, stop loss, and then it goes down, and then you need to keep on repeating the process. Now, what I have noticed over my years in trading is that when you're trading with the trend, you wouldn't usually get stopped out. And that's really interesting, because although this is a 1.1 or 1.8, sorry, and even if you would look like that, this will be a 1.29. But what I have learned over the years is that many times the price goes into my sell and then it goes down. And obviously, because I can lower my stop, what actually happens in the long run is that my actual stop loss, effective loss, so the average loss after each trade is usually a bit smaller than what I would have thought from the beginning, up to 40%. So as long as I keep my TPs unchanged and only adjust my stop loss orders, I actually come out winning. Okay, this summarizes how we can use multiple time frame analysis here, and then we follow through with another update explaining here how we can go with the trend, as this now is again, and the short term and the long term is now aligned again. So that is what we've done in this video. If you have a question or a comment, just drop it below. We'll be happy to help you out.